All right, let's talk about stocks. And I know, just hearing the word probably brings up images of crazy charts, stress, and numbers flying everywhere. But I want you to just push all of that aside for a minute, because today we're going to look at building wealth in a way that's not only saying, but yeah, actually kind of cute.
So, be honest, when someone says stock market, what pops into your head? Is it something like this, a giant, flashy casino, where you're just throwing your money on the table, pulling a lever, and praying you get lucky? It's a super common way to think about it, and hey, I get why. But what if I told you that picture is just completely off base?
Yeah, you're not a gambler in a casino. See, you've been thinking about this all wrong. It's not a casino. It's a zoo. That's right, your own personal zoo. And you're not a gambler? You're the zookeeper. Your job is to build the most amazing, thriving zoo you possibly can. Now, I know that sounds a little weird, but just hang in there. I promise this is all going to click.
Okay, so welcome to the Investor Zoo. First things first, before we start collecting all these cool animals, we need to understand what a stock really is. What is this creature we're trying to add to our collection?
So in the fancy finance world, a stock is called a residual claim. But let's just forget that term. Think about it like this. It's feeding time at the zoo. The company just earned a bunch of money. That's the food. Now, who eats first? The lions. These are the bondholders, the lenders. They get their guaranteed piece. Then, the hyenas come in. That's the suppliers, the government with taxes. They take their cut too. And you, the shareholder, the owner of this little meerkat, you get what's left over, the residual. Now, that might sound like you're just getting the scraps, right? But here's the secret sauce. The lions and hyenas, they get a fixed amount. Their meal is always the same size. But your potential leftovers, they're unlimited. If the company does incredibly well, that pile of leftovers can be huge. And that's the whole game. You take on the risk of getting less for the potential reward of getting so much more.
All right, you get it now. You're collecting these business animals for your zoo. The big question is, what's your philosophy? How are you actually going to manage this place? Because believe me, there's more than one right way to do it.
So, the first big choice you have to make is, are you an investor or are you a speculator? And they are worlds apart. An investor, they're like someone raising a champion show dog. They pick a puppy, study its lineage, its health, its temperament. They spend years patiently training it, caring for it, all with a long-term goal in mind. The speculator, well, they're down at the county fair, throwing $5 on a chaotic hamster race, just hoping their hamster runs in the right direction. It's pure guesswork. One is about patient cultivation, the other is just a bet. It's all luck.
Okay, so let's say you've decided to be a real investor, not a hamster race bettor. Even then, there are kind of two main styles of zookeeping. First, you've got the defensive zookeeper. This person is all about safety and reliability. They love the sturdy tortoise, the one that's going to outlive everybody, or the hen that reliably lays an egg every single day, no drama. Their main goal is just don't mess up, avoid the big catastrophic mistakes. On the flip side, you've got the enterprising zookeeper. This is the treasure hunter. This is the person who goes to the animal shelter and finds that scruffy-looking mutt in the corner, but they see something. They see the potential for a true champion. They're actively looking for those mispriced gems that everyone else has overlooked.
So, you've picked your style. Awesome. Now comes the really fun part, actually picking a new animal for your zoo. But wait, hold on. You can't just grab the first cute thing you see. Nope. You need a system. You need a checklist to make sure it's actually healthy. And it's a pretty simple 3-step checklist. First up, business quality. You got to ask yourself, is this thing a majestic eagle that dominates its territory? Or is it kind of a sickly pigeon? Does it have some real lasting competitive advantage? Step 2, financial strength. Look, can this animal survive a tough winter? Or is it going to fall over at the first sign of a blizzard? You got to check to see if it's built to last. And number 3, and this one's crucial, valuation. Let's say you find a literal goose that lays golden eggs. Amazing. But are you paying a fair price for it? Or are you so excited that you're willing to pay $1 million for a $10,000 goose? You have to be disciplined about the price. Okay, so your zoo is growing, but it's not always going to be this peaceful, quiet place. There's going to be a lot of noise and chaos coming from outside the walls. And it's mostly coming from one source, a totally manic monkey. Let's talk about how to deal with him and how to handle the market's crazy mood swingers. The great investor Benjamin Graham came up with this amazing analogy. He said to imagine the market isn't some faceless thing, but a person, a business partner, and his name is Mr. Market. Every single day, without fail, he shows up at your zoo and offers to either buy your animals from you or sell you some of his. But there's a catch with Mr. Market. He is not well.
So yeah, think of Mr. Market as this totally manic, chattering monkey. He's your partner, but he is all over the place. One day, he's just bursting with euphoria, literally bouncing off the walls, screaming that he'll buy your boring old tortoise for the price of a Kentucky Derby winner. But then the very next day, he's in a deep depression, curled up in a ball, and he's whispering that he'll sell you his prized, magnificent peacock for just a handful of peanuts. The key here, the absolute most important part, is realizing that his emotions are his problem. They have nothing to do with you or the actual value of your animals. Your only job is to completely ignore his daily nonsense and maybe take advantage of him when his prices get truly absurd.
So with all this in mind, the animals, the manic monkey, how do you actually build a zoo that lasts? Not just for a year, but for decades. Well, it boils down to a couple of master principles. This is what separates the real pros from everyone else.
If you remember only one thing from all of this, make it this: margin of safety. It is the master principle, the whole shebang, and what it means is simple. You build a big, strong, electrified fence around your entire zoo. And how do you build that fence? By only buying an animal when you can get it for way, way less than what you've calculated it's actually worth. That difference, that discount, that margin, that's your fence. It protects you from everything. It protects you from bad luck, from a freak storm, and, most importantly, it protects you from yourself when you mess up your analysis. It's the ultimate buffer.
Because here's the thing. At the end of the day, all of this proves that successful investing has almost nothing to do with being some kind of genius who can predict the future. You don't need to be the smartest person in the room. What gets rewarded, what really matters, is character. It's your temperament. It's about patience, discipline, and being able to stay calm when everyone else is freaking out.
Which brings us to, honestly, the scariest and most important truth of all. After you do all the research, after you have your checklist, the single biggest danger to your zoo isn't a recession, it's not a market crash, it's not some competitor. The investor's greatest enemy is, and always will be, himself. It's your own emotions, your own fear when things look bad, your own greed when things look good, that will do the most damage.
So, if you're your own worst enemy, then what's your greatest ally? Well, it's simple. You need to be the capybara. I am dead serious. Just look at this guy. Have you ever seen an animal more unbothered in your entire life? He's just vibing. He's calm, he's patient, he's just sitting there in his hot spring completely unfazed by all the manic monkeys screeching and throwing things all around him. That right there is the mindset of a truly great investor. So I'll just leave you with that. The real question isn't, can you beat the market? It's, can you be the capybara?